Good evening, guys. How was your weekend? The market have been showing us his hand, and we have been trying to respond to it. I know my analysis last week. What I said, some of my analysis were right, some were wrong. That is trading for you. You can't be 100% right. Trading as a whole now, I was in the GU buy on Wednesday and on Monday. On Wednesday was a little bit tough because just for it to tap one pip into my take profit, it reversed against me. Though the account basically, what I normally do for that specific real account, for this specific real account is I don't take break even trade. All I take is I want to get my 1:3 risk to reward ratio. Just to every account you enter has to be defined. Every trade you enter, you have to have a definition principle for it. Now, so I took a trade on Monday. I took a trade that is London and New York. I took a trade on Wednesday. I wanted the Tuesday to show me his hand very well. So I took a buy. When I took a buy on 1:3, just by one pip, the market reversed against me. And based on my rule on this specific account, I don't do break even trades. So I just left it. It took me out. See, no problem. So I was now going through the pairs and I look at Euro JPY. And Euro JPY was a very nice setup from the beginning of the week. Though it was consolidating to some extent. So now, as it is now, I'm still in the trade of Euro JPY. I'm still bearish on Euro JPY for this week. Now, what is there is, in trading you must have losses. This is a real account. So let me go to one of my demo accounts. I've been trading for 2 years because I got 300 pips on GU based on my analysis. Before I even did that video last week, I was already in profit, almost 18 TP. This account I started with 500 pounds. Though it's a demo account, so I trade both demo and real account because it gives me that opportunity to express myself in both ways. So I'm trying to log in. This account is 2 years old. My goal is to be able to achieve certain percentage per year. So I build the account from 500 GDP to this is what it is now, 789 at a constant lot size. So this was the last trade. If you look at it, 12394 to 12694. Look at it at 0.12. This was my trade I took. So that was all. So this account has been 2 years, since 2024. I wanted to see how the market looks like if you're a position trader or swing trader that is looking for certain little percentage per year, which is what gives consistency. Because if you look at the bank looks for 10 to 20% per year. I was trying to target, so I don't know how many. I'm going to calculate the percentage later. But from 500 pounds to 789 pounds on a constant loss size of 0.12. So this is the account I took the buy. Now gold, I talked about gold reaching the 3,000 level. I knew that market as it was, you were at deep premium. I wanted it to hit before retracing, but it seems it wants to retrace. That is part of the game. This account of 136,299, I started 100,000 just to play with it. 136,000. This one I started with let me the demo trading. I started with 50,000. I started with 10,000. Sorry, I'm up 50,000 and 95. This one I started with 1,000. That was last 2 months. Xness, my demo account used to, even there's one trade on the Xness I'm present in. Now that trade now is almost 300, 200 pips. I check back, it's not, the account is not there, I have to start again. But this one is just for me to practice day trading from 1,000 to 200. $200 use and do what you want to do. So this is my real account. I want to try and build it up back again to eliminate that loss I took from GU. Though my analysis was right on the weekly, but there were a little bit of just for it to take me out at TP within 1 pips, it just reversed against me. There I know that this market, if the market was highly bullish for the week, it would have not used the news as a catalyst. I said it one time, to go and clear out those my liquid resting below those lows. So that is just the real problem on this market. Sometimes you'll be trapped believing there's a specific TP for it to reach. All of a sudden you will see that the news just comes in and come and take you out of your position. I'm solely bullish on Euro JPY, GJPY. So let's go to the chart now. I just want to show you a little bit of my account. So I want to still build this account very well. It's very important for me because I hate seeing red. I won't lie to you. I hate seeing red because of my time and effort I've put into it. So let's go to the chart now. Based on my analysis, specifically for this particular week, is that this week was this last week that passed had a lot of changes to my analysis, because there are some things I was seeing, though I might still be wrong, but this particular week I want to see some movement in my own direction. I just believe I'm going to be right, because the market has a way of manipulating, because the way they make money is the ability to manipulate where price is going to. The ability, I say it again, the ability to manipulate to where price is going to. So as the market is, and it will always be, the only way they can make money, the only way this algo can function is having an ability to manipulate, so that it can, because if there's no manipulation, there is no liquidity. There has to be manipulation before liquidity can be in place. There have to be manipulation before volatility can be in place. Volatility, correlation, liquidity, all of them works together in order to trap traders. It has nothing to do with trying to understand the other blocks of, trying to understand the fair value gap. Where you have a fair value gap, you also have an inversion fair value gap. Where you have a bullish breaker, you also have a bearish breaker. So where you have a resistance, is later changed to support, because that way the market has its ability to leverage on what? Trapping pools of liquidity. So now, based on what I have seen for this past week and the close, let's go to GU. Let's see, because this is my weekly analysis. Every week I try to bring weekly analysis because it is what gives the money. Because you have to have the weekly. If my weekly was right on GU, I promise you I would have hit my TP. But because my weekly was wrong, it took me out of my position. But no problem, I'm still in a trade at Euro JPY, which I showed earlier. So let's see. Now let's see the Euro, so the GDP USD trade. The GDP USD trade. Look at this. There was a very aggressive move on Thursday. After clearing out buy side liquidity from the market on Wednesday, we saw this aggressive move on Thursday. That was what constituted or made the weekly time frame to be what? Bearish. That was the major move that made it to be bearish. Market makers makes money by manipulating price. That is the backbone of this market. They manipulate price because that is the only way they can make money. And that is the only way you yourself can also make money. Now, I said earlier, that was last week, that price is likely to go to 12700 and to this 12800. But now, based on this analysis now, I don't know, presently, I'm anticipating price to come to this, I think, bad as a bad, bullish order block on this weekly time frame on GU. So if I'm looking for GU as a means of tapping into this bullish order block, so our major analysis, let's go to our major analysis, which is the dollar index. The dollar index, sorry, I clicked on Euro Aussie. This is not where I'm going to. So let's go back. This is the dollar index. Now I'm clicking on the dollar index. So the dollar index presently now, and this is the dollar index. I'm waiting for it to open. So now this is the dollar index. Last week I was anticipating price to go down to 10500 to come below these lows. Let me point it for you. To come below these lows. If you can follow to come below these lows. To come below these lows to sorry, I'm coming, and it's yes, to come below these lows. But this bullish order block tends to hold price. So what is there now is looking at this market right now. There's a strong possibility, though we will have a break in market structure back to this bearish order block, but we have tapped into a bullish order block. There's a strong possibility we might see price move to 108.00. That is my own specific analysis for this week, just to try and get it right. So if dollar index is likely to be bullish, because what I was anticipating last week was an aggressive move, but it did not go. An aggressive move down to 105.40, but it did not move there. So I was anticipating that, but now we have a strong retracement back into the underlying bearish trend and tapping into this order block, this bullish order block. Now if you look at the monthly, let's look at the monthly. Look at the monthly time frame on the dollar index. Now looking at the monthly time frame, we have this price tapping into the bullish breaker, here, and this, I want this fair value gap to be an inversion fair value gap, whereby is a way of trapping pools of liquidity, believing the market is going to sell short. And price have worked below these lows multiple times for the past 2 years, and it have broken out of the range now. This is just a retracement. We might see continuation to this particular high here, which is around around 1114.03, 114 points, just 114. You can keep it at that. So as a long-term trader, you understand this is your good mind for you to, if you are right, and this is what I'm anticipating for a move to this 114.00, because if you were to catch a swing trade, you know how much you are looking for. You're looking for 10, 20 to 1 risk to reward ratio. But as a day trader, you know you are trading in line with the underlying direction of the higher time frame. So if we are looking at GU now, we're looking at GU now. GU on the monthly. Now the monthly closed on a bullish scale. Now this bullish scale that the monthly closed at is, should I say, is a little bit suspicious, but for now, based on my weekly analysis, I want to see price trap pools of liquidity, traders believing okay we're in an uptrend, trend line and all those things, or tap into a bullish order block for a continuation move up after clearing liquidity. But I want to see price continue down. The market will surely show us its hand, no matter what. It might take time. You might have 1 or 2 losses, but once you understand where the market is likely to reach for, you will recover your losses times 4. That is the beauty about trading. You cannot just say okay, you will be right at all times, but it's just like a business. Every loss is just like let me say a task for doing 1 or 2 things in the market. So that is what I'm anticipating. So for the week, I am bearish. I'm bearish for the weekly. Like I said earlier, I'm bearish for the weekly time frame. Now this is the daily time frame. Usually I don't used to like Monday sometimes, because when market moves aggressively down like this, you see that price usually goes back to short-term premium before moving in the underlying direction that is supposed to. But there are various ways. You might see Monday continuing the underlying direction, then Tuesday retrace back into what? Short-term premium before a continuation move down. So I'm bearish tomorrow. I want to see this aggressive move. I want to see the aggressive move, to this fair value gap here. Break into it and still continue seeking lower price to this downside. Right here, I think, right here, yes, right here. So if price can just reach this place, I want this fair value gap to be filled and still continue seeking lower price if possible. But trading is trading. We just have to. And if you look at it, overall structure, we're in a downtrend. So this overall downtrend, we're in a downtrend. We might see price continue its downtrend, because if you look at the weekly time frame now, If you look at the weekly time frame now, we have tapped into a bearish order block right here, and we saw a massive reaction, and we have tapped into 1200 round number. So let's see what happens. Another pair now that was supposed to show me what I wanted last week, but it did not because of the way the market moves, was the USD. Aussie USD that was anticipating bullish move gave very strong aggressive move. That means the lows are not safe at all. If you look at the weekly, let the weekly time frame show up now. Let the weekly time frame show up. This is the weekly time frame. That is the lows now, because we're in a downtrend. The lows now, anybody buying, holding for a long-term position, don't know yet, but price coming down to at least 0.61396. Aggressive move and breaking this lows might be our next pulse or draw on liquidity. One thing about trading, anything is possible. Anything is possible. That is just the thing that is in this market. So that is why you just every week you have to have a directional analysis. Whether you're a swing trader, day trader, position trader, you just have to have something. And for gold now, gold have shown a strong interest in moving bearish. Presently, moving bearish. A very, very strong interest in moving bearish. Because the real thesis is that this bearish move might continue this coming week, because it might continue to some extent for like 1-2 weeks, or we might see a reversal to 3,000 after trapping liquidity for a continuation move down, believing that it's going to go down. Traders wants to be short, they'll be trapped for a bullish move to the upside. Don't know yet, but for me, I'm bearish for this week because I still see good USD still seeking lower price, at least coming down to the 2790-ish level, 2790.11 level. We'll see what we can do from there. So all this market, they move with volatility, they move with liquidity. Their godfather is liquidity. They make money by trapping pools of liquidity. That is how they make their money. They make their money by trapping pools of liquidity. And one nice interesting pair is the USD CAD and USD CHF. The USD CAD and the USD CHF. Let's see the USD CAD now. The USD CAD gave my analysis a run for his money. But last week I was anticipating that move to be bearish, but after tapping into this fair value gap, it gave a strong reversal. That means we might likely see a large or a move to this level of 1.46000, if you can see it on the chart. Yeah, 1.4600. Though possibly tomorrow, which is Monday. That is why all this trade, I don't like trading at premium price, because you might see some small retracement back down, or possibly you will see, because premium is, you don't know where premium is likely to stop seeking premium, or you don't know where discount is likely to stop seeking discount. You might still see an aggressive move on Monday, but anytime you see consecutive candles going into the close or close, they won't just start that week easy for you. Sometimes you might see that retracement back into short-term discount before a continuation move up. The reason why is to trap pools of liquidity, especially on the 4 hours, 1 hour. 2 hours, 8 hours. There are traders that trade support and resistance at those levels. You understand? Which are against the narrative of the daily time frame, even the weekly time frame. So for them to what? Give you their money. So that is how the market works. It's a zero-sum game. Now USD is a very nice example of what someone can take this week on the weekly time frame. It's a very, but first let's go to the daily time frame. Let it show the daily time frame for us. You see the daily time frame. You understand? That is the illusion of trading. You see now, price have tapped into this bearish order block. Traders are willing to sell short. Illusion of trading. There's liquidity now. Possibly you might see price give them their money on Monday, but at the end of the day, there might be a lot of long-term traders that believe market is still going to be bearish, and they'll be trapped. Their liquidity will be resting above these highs. All these highs, yes, all these places, their liquidity will be resting based on where they put that stop loss. Now, based on my weekly analysis and what I've anticipated for the dollar index, and the weekly is a very nice car. I love the weekly for this pair. I love the weekly. I won't lie to you. I love the weekly on USD CHF. As I have tapped into this weekly bullish order block, it just reacted from it immediately. You might see price go up to this level of 0.92. So this is a trade for anybody that wants to trade. I may trade it along the week, so I may trade it within the week, but it's just a way of anticipating this move. At least 100 to 200 pips. But you know that Monday has their own Monday. That is why one of the most dangerous days to trade are Mondays and Fridays, because usually you have that strong premium or you have that strong discount. As we are now, we're in a short-term premium now between this range high and this range low. But just stick to your buy. Stick to your narrative and stick to it. If it shows bearish, take the loss for normal day for that day, knowing that if price taps into this fair value gap, right, this bullish fair value gap, you can just anticipate that bullish move. If that one, you either wait for that bullish appearance to open, or you anticipate before time, anticipating or waiting for that price. But people that makes more money are people that anticipate before time. They get the better price for the market. So that is how it is. So that is all. Because now, what am my closing for the week? I want to see the dollar index to be bullish. I want to see GU to go down, Euro USD to go down, in line with the underlying trend. I want to see gold to go down, GJ to be down, but it has its own command there. But Euro JPY should be bearish also, because if you look at Euro JPY, I love Euro JPY setup on the weekly time frame. Let's look at the weekly time frame, because there are pools of liquidity that needs to be cleared, especially trailing stops and traders that are holding on for maximum moves in the market. And I even love the way the market closed, because it closed with a bullish signal, giving me a strong opportunity to sell short, because it's a little bit at a premium price. Between last week's range, we have a little bit of a premium price right here. So when you let's look at the weekly time frame, because the weekly time frame is one of the weekly and the monthly time frame they are the two most important time frame. Right? Most traders don't go to those times, and they are also the real controllers of the market. So I'm looking at Euro JPY to give me that bearish move to at least to this level of 154.00. If you can see it on your chart, also 154.00. Let's look at the monthly time frame. The monthly time frame gives that bigger picture to know where that market is reaching for. See, the monthly last week closed bearish, and they are aggressive. There are pools of liquidity resting below these lows, and traders that have been on the uptrend for there are traders that have been on this trend for 2022, still holding on to some certain positions. We have a break in market shop back into a fair value gap for a continuation move down. For a move down to what? Possibly 152.00 to this. We might see price tapping into this other block close to it right here. Let me. It might even go down to this low right here. Yes, so right here. So I'm anticipating that move. So imagine you are looking at least 300 to 200 pips. As a day trader, you can capitalize on this. I'm capitalizing on this move, Euro JPY this week. I'm capitalizing on GDP USD this week. I'm capitalizing on Euro USD. All this market, even Aussie USD, I'm anticipating bearish move. I'm looking at now. Let's go to crypto now. I've seen this move right from time like 2-3 weeks ago. I know that it's going. If you look at the weekly time frame, especially the weekly time frame, you see those fair value gap consecutively. Those fair value gaps that needs to be filled. This is a monthly time frame. This is a monthly time frame. Possibly we might still see price go down to these lows. Yes, at 71,280. But price have tapped into this fair value gap right here. So let's see what the market does. Now let's go to the weekly time frame. Though I don't trade crypto that much because the volatility is only good like it's too much. Maybe they come up, I just manage myself. I can't go where I only go fear Bumambi. Now they manage one no. Now this retracement on the weekly, I don't need to go to daily. I know it's a strong bullish move on the daily time frame. So based on the weekly time frame, we might still see price move down, or liquidity will be trapped for a continuation move. But I'm still anticipating move to the downside. So any bullish move is a rally for smart money to sell short at a better price for a continuation move down. Just it's a bullish market, but that small retracement to this level, to around let's just say, if you can see it on your chart, around 74,500. Just look at it, you see it. 74,500. Now if you look at the daily now, the daily, there's a strong retracement back. I've not seen the daily, but I know I don't need to check. You see that there's a strong retracement back up. See the retracement. If you look at the 15 minutes time frame, you see that there's a move up the upside. Now this move up might not be a reversal back to this side, but since I'm anticipating bearish move, so every move up is a rally for a continuation move down. So though I'm not trading BTC USD, it's just a way you'll still see I'm anticipating more lower prices on BTC USD. That is what I'm anticipating, but I'm not trading crypto. So the ones I'm anticipating right now, so for GDP card, I anticipated it right last week. It's Aussie, NZD, all of them gave that nice anticipation that I had. Though there are a lot of pairs someone can take. You just have to take few that you can be able to manage with or grow with. That is how it is. Now this is the weekly time frame. Let's go to the weekly time frame of GDP card. The weekly time frame on GDP card, we have a break. All these highs, they are gone. Nothing you can do. The only thing you might see this week is you might see a bearish retracement called fractality of price into this weekly order block for a continuation move next week, possibly. Or you see massive breakout and continuation move. We might see price move. So I'm anticipating a move to the upside this week. Price is surely going to reach 1.8400. Surely going to meet 1.8400. There's a bullish move on GDP card this week. There's a bullish move on GDP card this week. But if it does not give us this week, just know that if there's a bearish move, that bearish move is a small skin, it's a trap. To trap more higher time frame trader, believing is a reversal because we're in a tight consolidation right here. But I want to see that massive move breaking above these highs because liquidity is trapped. People that are short, they don't want them to get out of the position. So any retracement, tap into this weekly order block should be a rally to 1.4000. Also, you see it on NZD and Aussie, but there are a lot of tweaks. So thank you very much for this week. Thank you very much for this week. So thank you for this week.